Hi Raj, what are you doing here? How are you?
I am good, Jay. What about you?
I am also good, Raj. Hey Raj, I've heard that you've just completed your college. Congratulations, friend.
Yes, Jay. Thank you. But I am quite worried now.
Why? What happened?
Nothing much, friend. You know my family. I have to get a job to support my family. And to get a job, I will need to go to a big city, which is not affordable. Also, my parents will be alone here. Thinking all these, I am quite worried and confused as to what to do next.
Wait, my friend. You do not need to be worried about. It's very simple. Few days back, Mr. Kumar had come to my home. You know Mr. Kumar?
No? Who is he?
He's a manager in the bank of our village. He was talking about some business correspondents and business facilitators, some BC and BF, and mentioned that any youth can be a business correspondent for a bank. Why don't we go and meet him and explore the opportunity? I am also looking for an opportunity within the village only, so I need not go to a city. I just don't want to leave my village.
Really? Then we should definitely meet Mr. Kumar. Let's go.
Namaste, Mr. Kumar.
Hello, Jay. How are you?
I am good, Mr. Kumar. Meet my friend Raj.
Hello, Raj. Namaste, Mr. Kumar.
Mr. Kumar, Raj has just completed his college and now looking for a job. You were talking about BC and BF when you visited my home last time, remember? We thought you might help us, so we came to you.
That's good to hear, Jay. And congratulations, Raj, on completing your college. Let me tell you all about Business Correspondent or BC and Business Facilitator or BF. But before this, let me ask you a question. What is it, sir? Have you heard about Pradhan Mantri Jan Dhan Yojana? Of course, yes. It was announced by Honorable Prime Minister in his Independence Day address on 15th of August 2014. This is a national mission on financial inclusion. Great! It's an integrated approach to take banking services to the unbanked and underbanked areas and to the people who are hitherto excluded and left to fend for themselves for their financial needs. A large number of bank accounts have been opened under PMJDY. Also, it is necessary to make these accounts active and use them as an instrument of economic activity leading to livelihoods to the underprivileged. In this background, the BC or BF model has been introduced.
That's what we wanted to know.
Good. A BC or BF is an extended arm of the bank's branch. A business facilitator or business correspondent acts as a bridge between the bank branch and the people in the area. She or he is the first point of contact and front face of the bank branch to the people. There are about 2.5 lakhs of BCs providing banking services in the country. And here is a good opportunity to become a business correspondent agent and make your career in this field along with earning good money for yourself and your family. So, how can we become a BC agent? Will you please tell us more about this? Sure. To become a BC agent and be successful in this field, you would need to understand the basics of banking and all about Pradhan Mantri Jan Dhan Yojana. So, let's start with basics of banking. Welcome to the course on Basics of Banking. Let's see what all are there in this course. Raj, as you have shown interest in becoming a BC agent, let me tell you about the BC-BF model and roles of BC agents. Sure, Mr. Kumar. We know that everyone needs access to financial services. But there are situations wherein people are not able to access financial products or services. These situations are called financial exclusions. There are a large number of commercial bank branches and cooperative societies which are offering banking services to the people of India. Yet it is estimated that nearly 45% of the adult population of India have not accessed financial services from formal financial institutions. The effort to bring the excluded in the formal financial fold is called as financial inclusion. However, it is seen that the existing design of the banking structure may not be able to achieve inclusion as there are certain cost and structural issues involved in the delivery of financial products. The branch banking and electronic banking may not be appropriate models to reach the excluded as financial inclusion involves financial education, counseling and building up of close relationship with people. This is really challenging. So, what to do to deliver financial products and services to those? I think banks must look to alternate delivery channels to reach the excluded. That's right. In order to drive financial inclusion, the BC-BF model for rural development has been conceived. The person or institution appointed as BC-BF functions as an extended arm of the bank's branch in these areas. A BC or BF acts as a bridge between the bank and the targeted people. Is bank's face in the areas where there is no branch. Directly assists the people in various banking and finance-related matters. Performs the role of a friend, philosopher and guide to the people with reference to financial inclusion. Looks like a challenging yet very interesting role. A BC should have knowledge of banking system. Correct. Therefore, it is required for a BC or BF to be familiar with the working knowledge of bank and its various functions. After completing this module, you will be able to define a bank, explain the structure of Indian banking system, identify public sector, private sector and cooperative banks, list the functions of banks. A bank is a financial institution that acts as an intermediary between savers and investors or users of funds. Banks offer various services to their customers. A bank accepts deposits from the public in the form of savings, current and/or term deposits. Allows a customer to remit money or funds from one place to another in the form of demand drafts or money transfer. Accepts instructions from the customer and makes on their behalf payment for utilities such as electricity bill, telephone bill and school fees. Accepts tax payments on behalf of government. Lends money for business, agriculture, purchase of house or purchase of vehicles. Transacts buying and selling of foreign currency in foreign exchange. Offers safe deposit vault facilities for safekeeping of customers' valuables. Offers ATM machines which allow the customers to withdraw funds from their accounts round the clock. Offers credit or debit card facilities which help customers make payments for their purchases. Sells mutual fund units and insurance products. Banks in India are generally classified into scheduled and non-scheduled banks. Banks which are listed in the second schedule of the Reserve Bank of India Act 1934 are known as scheduled banks. Unscheduled banks form a very small component and function as local area banks. Scheduled banks are further classified into commercial and cooperative banks. Commercial banks are classified into public sector banks, private sector banks, foreign banks, regional rural banks, and local area banks. Cooperative banks are classified into urban cooperative banks, agri-cooperative banks, and land development banks. Public sector banks are the banks in which majority ownership, 51% or more share capital, is owned by the Government of India. Approximately 72% of the banking business in India is performed through public sector banks. These banks are further classified as displayed on the screen. Click each type to know more about it. Read the question and answer. Click on the right option and click Done to complete answering the question. Private sector banks are further classified as displayed on the screen. Click each type to know more about it. These are banks incorporated in India whose share are held by public. Majority of these banks belong to the category of old generation private banks and are 13 in number. These banks are characterized by small balance sheet size, regional operations, and traditional type of management and business activities. The other category of private sector bank is the new generation banks. There are 7 such banks. These banks are incorporated after 1993. These banks are better capitalized, technology driven, and aggressive in business development. These are the banks incorporated outside India but granted license by Reserve Bank of India or RBI to do banking business in India through their Indian branches. While there are many foreign banks operating in India, their branch network is smaller and most of them operate in metropolitan cities and state capitals. Their operations are technology driven and a good part of their business comprises of corporate banking, foreign exchange, export-import finance, and merchant banking. These are banks which have been given license to function in a given area. They operate with a low level of capital and cannot offer all the financial services of a commercial bank. There are only 4 local area banks in the country as of now. Cooperative banks are registered under the State Cooperative Act and multi-state cooperative banks with the Registrar of Cooperative Societies. Their main regulator is the state government or central government in cases of the cooperative banks operating in more than one state. The organizational structure and management setup of cooperative banks is based on the cooperative principles. Cooperative banks are classified into primary cooperative banks, that is, urban cooperative banks, short-term cooperative banks, that is, agriculture cooperative banks, and agriculture and rural development banks, that is, land mortgage banks. Read the question and answer. Click on the right option and click Done to complete answering the question. Now we have seen the structure of banks in India. Let's see their functions as listed on the screen. Accepting deposits, loans and advances, remittance services, miscellaneous services, electronic banking. Click each function to know more about it. A bank accepts money from its customers. A customer can keep his or her money in current accounts where no interest is payable or in savings accounts where nominal interest is paid. In both these accounts, the amount deposit is repayable back to the customer as and when needed or demanded. The accounts where the customers can keep their funds for a longer time are called term deposits. Unlike current and savings bank deposits, the amount deposited as term deposits are normally repayable only after the expiry of the agreed term or period for which it is kept. In addition to meeting their operational expenses, banks also have to pay interest on the deposits at agreed rates of interest. Therefore, banks have to invest or lend money and earn interest. Lending money by way of loans and advances of various kinds is thus an important traditional function of a bank. Banks lend in the form of cash credits, overdrafts, demand loans, and term loans. Customers have to make payments for purchases in the place of their business or in the place of business of the seller. However, it may not be possible for a buyer to move from place to place for making payments, nor will it be economically viable to carry large sums of money from place to place. To facilitate this, banks have branch network spread across various regions. This network enables the banks to remit funds of their customers, if needed, from one place to another in the same country or overseas by electronic funds transfer or by issuing bank drafts. In addition to the core functions, banks also render other services which are useful to customers, business firms and members of the society. These services include safe deposit lockers, safe custody of valuables, issuance of travelers' checks, letters of credit and guarantees, collection of outstation checks, bills, hundies, furnishing opinion reports on their customers, agency services for government business, correspondent, trusteeship and executor's business. In the wake of the recent strides in information and communication technologies, almost all commercial banks have adopted information technology and IT-driven systems. Banks have adopted IT and computerization for front office operations as well as back office operations such as internal accounting and books balancing and settlement of transactions. Information technology has thus brought about anywhere and anytime banking and contributed to the speed, accuracy and confidentiality of customers' transactions while enhancing customers' convenience. Now, let's see some new features of banking. Mobile banking. Most banks offer instant 24/7 interbank electronic fund transfer service through mobile phones. Payments can be made from mobile to mobile, ATM to mobile, bank account to mobile. Besides fund transfer, mobile banking also offers merchant transactions and balance enquiry. Internet banking. Internet banking is a convenient way to conduct bank transactions online instead of finding a bank and interacting with a teller. In a broad sense, it is the use of electronic means to transfer funds directly from one account to another rather than by check or cash. Internet banking will help check account statement, transfer funds, open a fixed deposit, pay utility bills, recharge prepaid mobile DTH and a lot more. Read the question and answer. Click on the right option and click Done to complete answering the question. Let's summarize what we have discussed in this module. A bank is a financial institution. Banks in India are generally classified into scheduled and non-scheduled banks. Scheduled banks are further classified into commercial and cooperative banks. Public sector banks are the banks in which majority ownership, 51% or more share capital, is owned by the Government of India. State Bank of India is the largest bank in India and has more than 17,000 branches. Cooperative banks are registered under the State Cooperative Act and multi-state cooperative banks with the Registrar of Cooperative Societies. The main functions of banks are accepting deposits, loans and advances and remittance services.